Hello, this video is on how to use the UC Davis OR budget templates. Now, the Office of Research has developed these standardized budget templates and offers these templates for use by all UC Davis departments. And they are found online at docs.or.ucdavis.edu/SPO for Sponsored Programs Office. It's a good idea to bookmark this address because one of the best ways to use these OR budget templates is to come back to this site and download a new template every time you are preparing a new proposal and need to prepare a new budget. And the reason for that is these templates are updated when new F&A rates or indirect cost rates come into play, or when there are new fringe benefit rates or new IRB single-use rates. Instead of just downloading a version and using that, come back to this page and download a fresh version so you know you always have the latest UC Davis rates. Now, at the top of this page, you'll note that there are FAQs. These are a good resource to answer questions that may arise as you work in a template. And you also see that there are a range of templates. The first one, template A, is the basic template that is used for the majority of proposals, and all the other templates are based off of this one. You would use template B if you have cost sharing in your budget. And cost sharing is when the university, UC Davis, is providing funds towards the project, either direct funds or in-kind funds, and you need to indicate those in the budget. That's when you would use this other template. Template C is a template for multi-budget proposals. And examples of these are NIH P or U series. So P01s, U54s, those all have multiple proposal budgets. So an example is if you're preparing a proposal for a new center or institute that's going to have a range of research projects under it, and they're all part of the proposal, that's when you would use the multi-budget template C. The templates D through F are for proposals to specific sponsors. So use template D if you're submitting a proposal using the California State Model Agreement, AB 20. Use proposal E if you're submitting a proposal to CIRM, the California Institute for Regenerative Medicine. And use template F for any USDA Total Federal Funds, TFF proposals. The last template is one that has been stripped, pared down, so you can enter your own rates and calculations. It has fewer formulas and dynamic options that all the other templates have, and this video will walk you through how to use those dynamic features. For this tutorial, we're going to use template A, the single budget, and what that looks like when you first open it up is just a long document with a lot of blank fields, and it can be intimidating at first, but hopefully this tutorial will help make sense of all of it. For this video, I'm going to be switching between this blank template that you would see when you first open up template A and one that is completed. So that way you'll see how I used that blank template and entered all the info. And you'll see that a completed one looks shorter because I have hidden many of the fields that were left blank. A few things I just want to touch on before we really get into it. And one is some general terms so that you know what I'm talking about. In case you're unaware, F&A costs are facilities and administration costs, and they are also known as indirect costs. And these are associated with the general operation of UC Davis, and they cannot be readily assigned to an individual project that you're seeking funding for. So examples of expenses covered by indirect or F&A costs are facilities and maintenance at UC Davis, general administration, departmental administration, clerical and administrative salaries and benefits. So these are indirect costs that are added to the direct costs that will be indicated in the budget, and direct costs are clearly associated with the project and they're necessary to complete the sponsored project. Just for clarity, examples of direct costs are personnel, salary and benefits who are going to be working on the project, equipment for the project, materials and supplies, and any travel associated with that specific project. Fringe benefits, I'll be using that term, and that refers to benefits that you get through employment, such as medical and dental insurance. So some of the benefits of using this template is that it calculates using the latest rates and fees, as I mentioned, for facilities and administration or indirect costs, for fringe benefits, for single IRB fees. And also there are built-in formulas that can calculate split rates. So if your project period spans 2 different fiscal years, and those fiscal years each have a different indirect cost rate, this spreadsheet will automatically calculate the split rates and determine how much is calculated at the first F&A rate and how much is calculated at the second F&A rate. So doing those on your own without the template can be pretty complicated. So the template helps with that. Also, the template is good in that you can customize it. You can change the appointment type, the months, you can add escalations. You can escalate by project year or fiscal year. You can change the F&A rates and bases. It's a really helpful tool once you know how to use it. I'm going to be walking through how to do all these different things. The first thing you see when you open up the blank template is that fields at the top, some have already been entered. And you're going to want to revise those so you have the accurate start date for the project and the end date for the project as defined by the RFP or our RFA, the request for proposal or the request for applications by the sponsor. And then within that, within those parameters, the actual project period that the PI wants. These budgets aren't just for research. They can be used for instruction or for public service projects. You just input the info as it should be. One thing up here that you'll note is you can choose whether it's non-NIH or NIH. And this is important, especially if you have an NIH proposal with subawards. By selecting NIH up here, further down in the spreadsheet, it adds 2 new lines. One is total subaward indirect costs, and then at the very bottom, it says total direct costs for NIH limit. So the reason this is important is because for subawards, the NIH does not count the indirect costs towards the funding included in the proposal, which means that you can take those costs that you would have spent on indirect costs and you can apply them to more direct costs to support the project. We'll get to how to incorporate those in a little bit, but it's important to note at the top if it's NIH or not NIH. And the way you're going to work through this spreadsheet is you enter all the information in the left and all the automatic calculations are made on the right. So we start off with personnel. Personnel is the most complicated and the section that takes the longest to complete. So after we get through the personnel section, you'll see things go a little faster. And the way the personnel section works, I'm going to flip to the other completed screen, is you enter all the personnel, the key personnel who are working on the project, who are going to get salary or benefits from their involvement in the project. Under annual salary, you want to indicate the maximum amount that they might work. So if you have a faculty member and they have a 9-month academic year appointment, but they have the option to work 3 summer months, then you want to use the full annual salary, the 9 months plus the 3 months, even though they're not going to work all 3 months. We just put in the maximum amount that they can work, and then we use the effort to pare that down to their actual involvement in the project. So you'll note here that for Charlie Apple, and Charlie is a female in this case, she has 2 lines. And the reason we enter 2 lines is we do this for any faculty member who may work summer months. Therefore, under benefits, when we have the 2 lines, we can allocate one for the academic year, and they get the benefits that accrue for that academic year appointment. And we can have a separate benefits section for their summer months, because summer benefits for faculty differ from the academic year. That's why we put 2 lines up here. And it doesn't matter that we're duplicating the figures here, because it's the effort that determines how much of these figures are going to show up in the budget. So in this case, we know that Charlie Apple, her base salary is $131,000. So you'll see we just input that number. We had it. But to calculate the summer salary, you don't have to do the calculations outside of the spreadsheet and then input those. You can actually put a formula here to help determine the summer salary figure. So what we did here is we put in a formula that showed we took the base salary and we divided it by 9 to get a monthly salary, and then we multiplied that by 3. And so that gives us the total for the summer, if she worked the whole summer, and then we have her total annual salary. Now for the Amy Admin, the project scientist on the project, we just got the info. She's just getting $50,000. She's not going to work over the summer, and neither are, well, they don't have summer salary because these appointments are all 12 out of 12. They're all full calendar year appointments, so they don't have a separate entry for summer salary. So you just input those figures as provided to you by the PI. So now we get to effort. And here's where we determine how much of that annual salary is going to be allocated for the project. So here it says 15%. Looks like, oh, the PI told us to input 15%, but that's not the case here. The PI actually told us to input 20%, shown as 0.2 in this formula. So we want to annualize their effort, and we want to cover their effort over 12 months. The thinking, the rationale behind effort reporting in a proposal is we annualize all effort. For a faculty member with a 9-month academic appointment, their effort over 9 months is extended over 12 months. This allows their effort to be comparable to that of employees with 12-month appointments. Right now, we're just looking at their fiscal year, and we're annualizing that by taking the 9 months that they are going to work, and we divide that by 12, and then we multiply that by 20%. So it's 20% annualized, turns that 20% into, it's actually 15% over 12 months. So we didn't then take that formula that we put in the first period here. This is project period 1, project period 2, project period 3, and then the total, create the whole project period. And we just copy and paste that same formula into the other cells for the 3 years of the project. Under salary basis, this is a drop down, and you can select a range of options. So this is for the academic year, which is 9 months out of 12. Now, Charlie has said that she intends to work 1 summer month. So for the effort, we just put 1 over 12 here. So that brings us to 8.33%. And then we indicate that these are the summer months of a 9-month academic appointment. Now, as I mentioned, we input the figures. We know from the PI that the project scientist, Amy Admin, is going to work 20% of the full calendar year. So we just put in 20% there. No additional calculations are needed. So for Thomas Doyle, the postdoc, it's a little more complicated. We understand that Thomas Doyle is going to work 50% of his time for 6 months of the project. So we determine from his annual salary, we determine 1 month, 1 divided by 12, and multiply that by 6 for 6 months, and then we multiply that by 0.5 for 50%. And that gives us a 25% effort on the project. So then we know there's going to be some graduate student researchers at that salary. And what we know about them is they are going to work 3 months of the year at 25% of their time, 25% effort. So we, again, use a formula where we determine 1 month, multiply that by 3 for 3 months, and then multiply that by 0.25 for 25. And that gives us 6.25% effort. So now we have the escalation fields here. There are 2 things we can do to change this. The default is 3%. That's pretty common. That's why it's the default. But if you want, you can change it individually for each individual here to another percentage. Or if you want to change everyone's percentage, you can go up here to where it says multi and use the drop down, and you can change everyone's escalation to 6%. It disappears here. Now we're knowing that they're escalating at 6% annually. But I want to drop that back to the way it was, multi and 3%. And one thing you need to pay attention to is whether the escalation is applied before the project starts, because you may want it to apply after the project starts. So this project is in the future, and you're indicating that there's an escalation of 3% for each fiscal year. Now, well, the default on the form, the template when you get it, is fiscal year. But what happens when you use fiscal year is sometimes it will apply the 3% escalation before the project even begins, which can throw off your calculations. You were planning to have a certain annual salary, and suddenly there's more annual salary. That's because the escalation was applied during the fiscal year. And you could just change that here. And so you'll see, if you look at the first year here, under project year, it's only $26,200. But if we switch to fiscal year, it's increased because the escalation was already applied before the project began. So if you find your calculations are getting a little screwy, just change from fiscal year to project year, and it'll start the escalation after the project has begun. All right, so all these are automatically calculated for you. I should let you know that there are hidden fields. There's a whole bunch of fields to enter personnel. When you're using this template, there are all kinds of formulas in this document. And so we do not recommend that you delete any rows. Instead, when you don't need a row, simply hide it. And if you're going to be copying and pasting anything in the document, be sure you're not copying and pasting the formulas. Just copy and paste values or plain text only. All right. So here I'm going to hide these fields again. And always check the calculations, especially if you've done copying and pasting while populating the template. Look for any red flags in the spreadsheet that may indicate that you accidentally moved a formula, and it'll throw things off. And if there are errors, look for fields that may no longer be auto-calculating. Let's see, moving on down to benefits. So the benefits, as I mentioned, we use the 2 lines, and these are drop-downs, and you can select which is most appropriate. Be sure to go down through the whole thing. So we know that for most faculty, you can just select faculty, academic, MSP, safety. If they are at the health system, if they are at UC Davis Health, then you would choose HComp faculty. So that has a slightly different rate than the campus faculty. But in this case, we know that Charlie Apple is not at the health system. And for summer faculty rates, you will note that there are 3 different rates. Unless you have a reason for choosing one of the other rates, unless you know, just go with summer salary A. And then the others are chosen based on their title and their role in the project. So these percentages are auto-populated for you. And up top, you'll see FY split, fiscal year split. This shows the split rate. So the 5 months are going to be applied at the first rate of 40.1 here, and then 7 months will be applied at the second rate. And the 5-7 split is determined by when the project starts and ends. And then all the budget calculations are automatically done over here. So if you're escalating salary, then yes, you should be escalating fringe as well. So moving on down, equipment, there are only specific things that should go in the equipment section. So, and this is important because equipment is generally not subject to F&A costs, to the indirect costs. So equipment must cost more than $5,000. It must be non-expendable. It must be standalone, not built into a wall, not part of another equipment complex. and it must have a normal use life of more than 1 year. And if you're not sure if something is equipment or not, you can write EQ help, equipment help, eqhelp@ucdavis.edu, and they can help you determine if something is actually equipment or if it's actually just materials and supplies. So software can be equipment if it costs more than $5,000 per copy with a normal use life of more than 1 year. As a caveat, though, annual license fees and maintenance costs are not considered capital assets. They are treated as supplies and they are subject to F&A, and they go down below in the materials and supplies section. And the last thing that can go into the equipment section is renovations and facility improvements, but they must cost more than $35,000. So I'm going to switch back to the other screen because the travel section is pretty straightforward. You just have to identify if it's international or not, when it's occurring. The participant trainee support costs. This section is specific by sponsors. So only some sponsors allow this section, such as the NSF. And this section is about participants who receive services or training from a workshop, conference, seminar, symposium, or other short-term instructional or information sharing activity that is funded by the sponsored award. And the participants do not perform work or provide services other than for their own benefit. The following cannot be participants: UC Davis employees, students or project staff who receive compensation for work performed directly or indirectly from the grant, research subjects receiving incentive payments, federal employees or paid speakers or other invitees who are providing a service. So in addition to the rows that you see here, under other, it would be appropriate to add registration fees for meetings, conferences, symposia, or other training projects. In my example, I don't have anything that goes under this section. I just wanted to walk you through what would go in that section. Materials and supplies, pretty straightforward. Publication costs and consultant services, I'm not going to touch on those. You just input a descriptor here and the amounts in these boxes, and then they'll tally up automatically. One thing to keep in mind is to be sure you're allocating for the proper year. So this first column is the first year of the project, but if you're only going to use a consultant in the second year, make sure that they go into the second year column, not the first year. So for subaward costs, I'm going to switch back to our other example because this is an NIH project, and therefore the indirect costs for the subawards are going to be excluded from the amount we request from the NIH. And the way you would indicate that is we're going to have a subaward going to UC Irvine, and we're going to have a separate subaward going to Stanford. And you'll see here, UC Irvine, they're going to be working the 3 years of the project, but Stanford's only going to be working in the second year. And the way you indicate that, UC Irvine is another UC, so we use the drop down. We can select UC, non-UC, excluded, or IC of above, indirect cost of above. So we select UC because they are a UC, and then the next line, we put UC Irvine again, and we show the indirect costs for UC. And then it's the same, Stanford is a non-UC, and then we use another line to show the indirect costs of Stanford. So here, those amounts are excluded. So we have an additional $45,000 that we can apply towards direct costs that we request from NIH. So that's how you would enter that info there. For the GSR tuition and fees, the indicated rates are the most recent rates that we got from grad studies, and the default of the academic year escalation on those rates is 10% a year. That you can change. We're just using a default, that the average amount, and here we indicate we have 1 GSR in the first year, 1 in the second, 1 in the third. Those could be different individuals, but there's only 1 for each year of the project, and the amounts are calculated based on the current rates. So non-resident rates are different from resident rates, and you'll see in the template, when you get to that section, that they have the amounts indicated here. So we chose the non-resident field to enter this info. So single IRB fees are when one institution is covering the human subjects approvals for all the involved institutions. So in this case, we are going to use UC Irvine's IRB, Institutional Review Board, approval for human subjects. And that rate is automatically populated. And here we're showing for the first year, the onboarding, it's a certain rate. And then for continuing review, it's a different rate for years 2 and 3. And that's how that info is entered. And other expenses, an example, something that might go in this category is a lease for another building that the research is not being done at UC Davis, and they're leasing the building to do it. And a lease is not subject to indirect cost rates. MTDC stands for Modified Total Direct Costs, and that's the standard way we determine the base that the rates are applied against. The university uses NICRA rates, the Negotiated Indirect Cost Rate Agreement, and it's negotiated with the federal government. And those NICRA rates use MTDC to determine what the base is. So excluded from that, as I mentioned before, is equipment, and there's some other exclusions. So that is input here. And so the last thing we want to show you here is the indirect cost base. So for this example, I'm going to flip to the other screen. When you first get here, on-campus research is the default, but you can change that by clicking in the field, and you can select off-campus research, or if it's another sponsored activity, or if it's instruction. If you choose other, then now we get some new fields you can enter here. You can enter the rate that you want, and you can change it from modified total direct costs, which is the standard, to total costs or total direct cost, or some other mechanism to determine that base. But in this case, we are actually going to use the off-campus rate. So as you'll see here, off-campus, it works off of the total direct costs and determines what those are to give you your total costs. So last thing that I want to mention is that at the bottom there are these different tabs. So the main spreadsheet is called the request, but we also have an F&A details page that shows you the breakdown of the split rates. And in this case, there are no split rates. It's using the off-campus rate of 26%, off-campus research rate. But if there were split rates, those would be indicated here. And these are for the F&A rates. As you'll recall, there were split rates for the benefits, but for F&A, there are no split rates. And then another tab to be aware of is the personnel reference tab. This can give you the personnel effort in person months. Some agencies request it in person months. And there's other breakdowns of the personnel here that may be in a format that is requested by your sponsor. So instead of having to make those calculations, you can just look here and see what that info is. So be aware of the other tabs that are available to you there. So then the last thing I want to mention is that in addition to these budget templates, at docs.or.ucdavis.edu/SPO, we have other documents that are helpful for you when preparing budgets. And those are found on the Office of Research website, the sponsored programs website. And it's a long address, research.ucdavis.edu/proposals-grants-contracts/SPO/training/PB for proposal budgeting. All right, so I apologize, it's not simpler than that, but when you get to this page, you'll see a link to the OR budget templates. You'll also see a document here, common budget formulas. Those can be helpful when you're preparing a budget. And so these are all helpful tools, and we have some additional FAQs there. Lastly, if you have any questions, you can reach out to proposals@ucdavis.edu, and they can help you. They can answer any specific questions that you have. Hopefully you found this training helpful, and I apologize for my dogs barking in the background.